Hello, 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 hello. What's going on, everybody? Welcome now, Stock Trades. How's everybody doing today? All right, ladies and gentlemen, unfortunately, we have not made a live in like a week, and it happened to be on the earnings of a lot of these companies, Humana, Alignment, United. So this is going to be a long, just look at how many tabs. Oh my, there's, is my computer breathing hard? Hold on. Oh my. Oh my God. My computer is literally breathing. This computer is like packed. Like it has like, I don't even know how many RAMs it has. It's breathing hard. Why? Okay, all right. Hopefully it doesn't die. Damn, I'm working the computer, guys. All right, so lots have happened in this week, and we're going to be talking about it. Okay, so there's a couple things though I want to do. I want to make some announcements. There's a couple, there's a lot of stuff that's happened this week, and I'm gonna just go through all these tabs, and we're gonna be making some changes to the channel. Just very quickly, we are going to start making shorter videos. A lot of people are going to appreciate this. It's tough though, because if I don't come online for a week, then you're going to get a long video because lots have happened. I mean, Clover just announced this, applauds White House. There's so many things to talk about. Okay. The other thing I want to talk about is, unfortunately, I don't see it here. Let me go ahead and just open up a tab, another tab, because obviously we need more. And let's go to Al Stock Trades, yeah. And let's go to the home page. And this is our website. So what I went ahead and did is we went ahead and made some changes to our product line, and we now no longer offer subscription for our old stock terminal Discord that has access to Tradealytics, Unusual Whales, OpenBB, and also the research, and also our community that from a self-response survey of 30% said that they have an approximate net worth of $45 million. So this is no longer available for subscription. However, you can get access to it through our lifetime access bundle products. Now, why did I do this? So like I said, in countless videos, we're going to be moving towards a, let me just remove that there. We're going to be moving towards kind of closing down the paths to get in our group, because one, I worked really hard to create a group that, is just, they're like scientists, right? Very smart people. There are scientists in our group, and medical doctors and plumbers and what have you. So I feel like in the next 24 months plus, in the next 2-3 years plus, a lot of people are going to see the reputation of our platform grow. Regarding, I personally believe I think this is the best educational platform that exists in the stock market. I'm biased, of course, because I created it, but you can speak to the disciples of these of the people that joined. We are not. So again, I'm not an investment advisor. I'm not a licensed advisor. I'm not a stockbroker. This company that I created has nothing to do with, FINRA or any of those folks. We do not offer stock recommendations or anything like that. So I feel like in the next 2 to 3 years, we are going to have a lot of people try to join, especially through the subscription route, that are going to say, hey, what's the next stock? What's this? And that's not what we do. We are, our platform gives you support and resistance, options, algo, and it has Tradealytics infused in it, which, you can pay $60 a month just for that, but we have it included. And that's just one small thing we offer. We offer so many things. And yes, Tradealytics is more for day traders. I used to do that. I used to do swing trading and day trading, but I'm a long-term investor. I personally think That's not what I, like to do, but we have people using it. But there's been a lot of folks that I've received emails saying, "Hey man, is this a thing? Do you trade live and show us, you getting in and out of trades?" And I need to be very clear. No, I do not, right? I do not show live trades. I do not tell you when to buy, when to sell. This is not, whoever does that is called, what's the word for it? Investment advice. Whoever tells you that is literally acting as an investment advisor. And that's not what we do. Okay. We do not do that. I'm actually thinking of getting my series 65. I'm actually thinking about becoming an investment advisor, not for not for a job or anything, just for myself, because I'm curious to see what's tested on there. And it's knowledge cannot hurt you. There's some knowledge that can really be annoying, but yeah. So overall, I'm not a financial advisor, and even if, let's say, I was to take the series exam, I will still not be your financial advisor, right? Be rad. Yeah, exactly. Yeah, I need to get through these comments, but yeah. So we removed the subscription because I believe in the next 2 to 3 years, the reputation of our platform is going to speak for itself. We've just taken another path. We're not like these other YouTubers that, are to be quite frankly honest, they're a lot of them are selling snake oil. So we don't want those folks, those subscribers to essentially come in our educational platform and dilute what we have. Really, it'll be a dilution to preserve the integrity of our educational platform, to where we use this data to look at, let's say, stocks that have performed really well, like Tesla, and figure out why have they performed well, do an analysis and say, you know what, let's learn about what is a revenue, what is operating income. You see, majority of my time is on the fundamentals and actually doing, fundamental analysis, because I love it. It's fun. I'm passionate about it because that's what changed my life, rather than so much technicals. Okay. So that's kind of what it is. And that's kind of, one of the announcements that I have. So we removed this. The next big announcement is we will be increasing prices soon. I got to figure out kind of when. I think either is going to be either in the new year or within the next, couple of, really, it's going to be a couple of months and we're going to be in the new year. We will be increasing prices. Given that the platform is pretty much almost solidified. To all the amazing members that have joined, we will be putting in, so let me just go ahead and open up, let's open up this here. We will be putting in, where's the education? We're going to be putting in more educational content. This is nothing. Like this is nothing. All this there's going to be over 100 chapters in our platform. And we are going to essentially, add over 100 chapters. And then we're going to go ahead and make video content per chapter. And that's going to be, a lecture. So we're still building it out. The reason why I stopped putting the lectures was we were building out the stock terminal. And unfortunately, what's the point of doing tutorials if you're going to have to change them in the next few months? So I'm expecting to do this in the spring semester of 2026. So it'll be in, so for folks that are not academic, it'll be January 1st, 2026, all the way to May 2026. I'm going to be working on this, and we're going to be adding that. But yeah, so as you can see, we're trying to what I'm trying to do, guys, is I'm trying to create a platform here that is purely educational, academic. Just like if you were to go to college, you would essentially have this information. Psychology, you're going to learn about Nobel Prize winners in psychology. about, what happens when someone loses something or wins. And, it directly parallels when someone buys or sells a stock. We're going to talk about just the, what are the, just the financial literacy things of understanding what most people don't even know what net income versus revenue is. So there's going to be that. And of course, we have something called a portfolio hedging. It's going to be an educational modeling system. These are stocks that, I'm going to put out as purely education. They do not constitute any form of financial selling or a buying of any sorts of nature. If you interpret it as such, then you are absolutely in the wrong. But you have to look at companies and use, because you got to pull companies in the terminal to analyze them, and it just so happens that these companies are publicly traded. We have to use them as an example, because if you go to college and MBA programs, they don't really look at companies that are actively being traded. They look at past companies like Sears or Circuit City. Why? I mean, those are important, because that's kind of like why they went out of business. Like what's it called? JC Penney. Let me see if I can find the stock. JC Penney stock. It's no longer traded. It's like it's gone. But what was the ticker symbol? What was the ticker symbol? Because knowing this is actually important. I mean, I really don't know what the ticker symbol is. It like literally JCP? JCP. I'm curious, because our stock terminal should still get the data. Let's see here, JCP, because we are an educational platform, so we should get the data. Yeah. So this is. I think this is JP. This is JCP, right? JCP. Yeah. Yeah. So this is I even know JC Penney's, right? So you can see, look at the revenue. You see, like, this is why it's so important for the educational platform. Look at this. You see how the revenue started going down. Look at the net income. Let's go ahead and graph net income. Where's net income? Okay. Look at that. You see how it's they try to recover, but it's been down really, right? So let's look at free cash flow. Let's graph free cash flow. You see how free cash, again, no improvement, right? So we could go look at book value. Ooh, book value is a good one. Let's do book value. And this is the definitions so people can learn. Where's book value at? Look at book value. $22 all the way. You see how it went all the way down? So the point is it's an educational platform. So you guys, are able to learn, why they filed for bankruptcy in 2020. And I think that the data ends in 2020, right? Yeah, you see the data ends in 2020. See, so a lot of people don't understand this. Like, why do we still have the data for JCPenney? It's because this is an educational platform, okay? And what the beautiful part about this is a lot of people that you speak to, like, I'm sure if I ask anyone here and I tell them what's outstanding shares, what's a stock, they don't know what that is. And it's unfortunate. Like, for example, I appreciate you, Clove to Retirement, best platform ever. Like, for example, Rock 88, you're saying why are insiders selling? Majority of the sales are tax related. I just can't see that such huge lots every month for months. It's tax related. And again, it's you got to dig deeper, and most people don't know these things. And this is why it's like I created this YouTube channel for a case study, right? To show you, okay, you know what? We're going to go ahead and we're going to follow. We're going to go ahead and pretty much we're going to follow exactly kind of what Drunken Miller said about just following one company, analyzing it, looking at its intrinsic value, and showcasing from that and learning everything there is about this company. Obviously, I do this for other companies, but it's just to distract from the mission. We wanted to do a couple case studies. We did a lot. We talked about Hood. And Hood now is, we talked about it in the $9 region. We talked about intrinsic value. We talked about Palantir, right? We talked about MP materials, and look at MP. Look at that. Within 1 year, look at that, 400%, right? MP's doing well. 400%. What else do we talked about so many things, guys. And the point is we have to use these as examples to showcase the what, because the problem is a lot of these people, like retail investors, don't put any weight in this in this information. They don't like this information. They don't care. They don't put any weight in this, and it's unfortunate because this is something that's so important. So anyway, that's a big announcement there. Just wanted to basically put that out there, because we are making some changes. Sadly, this is going to be a long video because there's just a lot to talk about, because we haven't made a video in 4 days, right? 4 or 5 days. So let me go ahead and let me just look at the comments real quick, because again, I'm trying to catch up with all you guys. So hope you all have a good Friday, guys. Okay, so let's go ahead and here. All right, B-Rad Cooley's awake. Amazing. Sorry about the late live. Just life, man. So there it is. And then boom, boom, boom. Let's see here. Okay. Let's see. We'll go there. And then now, been waiting for you forever. Oh, Ray. I'm sorry, Ray. But here's the thing, Ray. The beautiful part about this, Ray, is, you can, again, this isn't it's educational, right? So what we're going to end up doing, though, and this is later on, we will be doing lifetime access just for this data. It's still going to, unfortunately, be pricey because this data is not cheap. But we will have our triple effect. I just don't like having like the nice 3 products is nice. So we're going to be doing that later. Like we're talking a year from now, which is going to give you access just to this information, not access to our community, because our community is what's more, I believe, valuable. And then let me see. What are other things I want to talk about? Oh yeah, Ray. Yeah. That's good. I remember now. Okay, Ray, check this out, Ray. So, Ray, it's okay because, if you go on YouTube, oh, by the way, this guy's hilarious, man. This guy's hilarious, man. You guys should watch this guy. This guy is this guy's such a troll. He's so funny. Okay. So, we have, we have 877 videos, guys. We have 800. You got to click live here. Majority of their lives. You got to look at all these videos we made, right? So we have, the information's out there. Okay. And you know what? Like, you can learn, what is intrinsic value. Like you could, for folks that are watching this in the future, just that don't have, that we're not able to get access. It's okay. Learn. Here's intrinsic value. You click on this and you'll learn intrinsic value definition. You can read about it and learn what it is. And there it is, right? Try to learn and you can essentially be able to, it's taken me, 10 years to basically be able to build something like this. But if you're hungry, you can essentially be able to do it, because the education's out there. It's all out there. It's scattered. It's not organized and sufficient. Like what we're trying to do, pull everything there, like a college degree, but even better. But, you can read about it here and you can see kind of what this is. Sadly, not a lot of information on this is probably a bad one here, but just try to learn what it is. Again, it's tough, right? But the thing is, we have over 800 videos, and I think that should be sufficient in being able to, learn this information, I would say. Obviously, the platform is accelerated. You'll be able to learn much more and deeper. But I would say, in regards to watching our videos, you are most likely probably more informed than 90% of people in the stock market. And I'm sorry, more than 90% of people in the United States about the stock market. Let's put it that way. Given how deep we go into the statement of cash flows, all these other things. Again, this is like an accounting class, right? I took an accounting class at Eller, right? I got an A. I took a business statistics, all these things. So I think my platform is way better than what I learned. Okay, so yes, what will be the lifetime price next year? I gotta speak to Linda on this one. We have like a pricing plan. Where the hell did I put it? So what are the prices now? So the prices now. So okay, so about 3,997, 4,047 plus. So if you use the coupon code SAS. Or SAS. Use the coupon code SAS. That'll bring it down to 4,000. Let's say it's 4,000. 1,200. What is it? 1,200. It'll be $2,800 now. I'm trying to remember what was the pricing plan. It's either going to be 5,000 or 6,000, and I think it's going to be incrementally increasing it by. So we increased it by 1,000. I think a couple months ago. I don't remember. And then we're going to increase it by another 1,000 in the next couple of months. I don't know when. I think either November or December. So yeah. So I think that's what it is. I think it's going to be 1,000. If not, it will be 1,000 just because I said it, because hopefully it's not 2,000 and it goes 6,000, but it is going to be, and we kind of have an example of what the short term is going to be, of what the next 12 months to 24 months of the price is going to be. We usually have it here. Yeah. So we will be increasing the prices to $10,000. I mean, think about it. That's like how many? 997. Yeah, holy moly. That's like let's see, 100 minus 28. That's like almost, yeah, it's like 90. Is that really 90? Wait, hold on. Well, I can't think. Yeah, that's like 72% off. That's pretty good. But we will be increasing this, and then this will end up going up more. And as you guys see, we don't like the bullshit. There's a lot of people out there that bullshit. They're like, oh, we guarantee returns. We don't guarantee shit, right? We don't guarantee shit, right? This is an educational platform. You'll walk out understanding what revenue is, gross margins, net income, and you'll be able to tackle. No. Oh my God. They made a girl picture of me. That's so funny. Let me see. You're just kind of going through all these questions here. Oh yeah. No, he was being annoying, honestly. He's just being annoying. So that's good. He's gone. Yeah. Please let us know in advance before price. Absolutely. I've been learning and buying CLOV 40 shares. It's not 400K shares, but happy to. Hey Ray, listen. I'm really excited that you found our platform. If there's one thing that I will say is we do not bullshit you. We're very honest. You could talk to the lifetime access members. I have never tried to, there was one time where I hurt someone. There was one time. It wasn't a human. There was one time. I used to have, it was already a stray cat, but still, I used to have the stray cat, and I took her in, actually, I say her, it was a boy. I took him in, and he was so sweet. I had nothing at the time. I had no money. I had nothing. The only toy he had was he used to take a piece of turd from his litter box and play with it. I feel so bad, and he used to literally take a piece of turd from his litter box and play hockey with it. And literally, I just see him bouncing his turd around the whole apartment. And I just felt so bad. I didn't have any toys. I couldn't afford any toys, to a point where I couldn't even afford him. So I had to, he, and the sad part is he loved me, right? He loved me a lot. And, I have to, sadly, I had to give him away. And so that was very painful. I had to give him away because I couldn't afford him. And, I let that cat down. I mean, that cat liked me, and he was like, why did you leave me? Why did you give me to someone else? So I guess I've done wrong in this world. And I try to make it up, obviously you see my animals now, I spoil the shit out of them. But that's always going to be in my heart. I fucked that cat over. I let it in my house, acted like I was its family. And then I couldn't take care of it anymore. So I gave it away to a beautiful family, but nonetheless, it trusted me. But anyhow, those are just my demons. But the point is, we will never try to, there's a lot of trust that's been dissolved by retail investors when it comes to folks on YouTube. And I'm telling you, we do not give financial advice. We will not tell you when to buy and sell. I'm not going to promise you that you're going to go ahead and you're going to 10 bag, 50 bag, 80 bag your investments. All I'm saying is what I'm basically seeing within my platform. I'm seeing people in our platform that have gone from nothing to like literally $50,000-$60,000 to like $2,000, $3,000, $5,000, $10,000 to a lot of money. And to all the people that are on the lifetime access that are listening, if you want to comment down to say your truth, you can go ahead and say that, right? So I'm seeing some miracles happen, and I'm seeing things that I have not even talked about. Like, for example, one of our members, and I did not mention this company. Correct me. I talk about a lot of stocks. I don't remember talking about this one. I did not talk about this stock. Well, hey, what the hell's going on here? Nope. I never ever talked about this stock before, ever. All right. I don't remember. Like, you could correct me if I'm wrong, if I did, but I did not talk about this company. And look at it. It went from 81 cents to literally $14. I did not talk about this. Okay. But our member bought it. Our member went ahead, bought it, and shared their due diligence. And I'm just very shocked, because if you go to I can't even say it, Rolls-Royce, they did that on purpose, I bet. Rolls-Royce, can't even say it. Maybe I'm not rich enough, right? You got to be rich to say these words, So let me show you here. Let me show you what the stock terminal did. That's what I'm saying. These people are finding these weird companies that I never even thought of looking at. So if you look at Rolls-Royce and you put it in the stock terminal, you look at it, guys. I'm going to go ahead and this is another example we could use, but this is something that I was not a part of. I can't take credit for this, but I'm very excited. Look at this. So operating cash flow, 2022, and turned positive. Free cash flow, 2022, it turned positive. And then net income, 2023, it turned positive. So it received the triple dragon in 2023. So if you look at the stock price, look at that. It was literally 80 cents, whatever. And then once it got triple dragon, it exploded. Literally, one of our members was talking about this. And I was like, why is he talking about this stock? I've never heard of this stock. And then I go put it in here, and I'm like, excuse me? What in tarnation is this? And and this is GPP, which is, I guess, was it British pounds or whatever currency it is. Again, this is a United Kingdom. I guess that's what Rolls-Royce is from. But isn't that cool? Look at that, man. So what I'm basically trying to tell you is, we will never give you buys and sells. We will never do that. And if you want that, then this is not the right platform for you. Okay. This platform will teach you and empower you to be the CEO of your own financial journey, to where you'll be able to be like this member who found this company, figured out that it just became a triple dragon, and I took advantage. I had no idea, right? I had no freaking clue. In fact, they started diluting here too. You can see there's some dilution here. Look at the outstanding shares, right? So I had no idea. In fact, what was the max of this? So yeah, looks like this thing crashed. So in 2013 it fell, and then in 2018 it fell. But really, the big one was here. So why did it fall? Why was it on a downtrend for so long? Let's look at free cash flow. Oh, that makes sense. Look, it's all in the free cash flow. Look, free cash flow was good until 2019, and all of a sudden it crashed. And once it crashed again. The stock price crashed with it, right? And then I think it became unprofitable too. Look at that. So in 2018, it became unprofitable. So people started pulling money out. Look at that. Gross margins were 7%, 5%. Now gross margins are 22%, right? So based off of this, it's approaching levels better than what it was in 2015. So most likely this stock can go up even higher. This is amazing. So again, I cannot take credit for this. I did not talk about this company. This is a member who found it and who shared his research on the lifetime access. And that's the beautiful part about this. I put in a lot of freaking investment in my members, teaching them this information. So I cannot wait to reap the rewards from you guys, because you guys are going to show me companies that are going to be amazing. And I can't wait to learn from all of you, right? That's the goal of any educator. And I love it, man. This is freaking amazing. So thank you for showing me this company. I'm just proud. Thank you. And I'm sure, you know what? I have not typed this in yet. I'm curious. What was the short interest of Rolls-Royce? Does it even show in here? Yeah, it doesn't even show. They don't have it. Oh, wait, they do. Hold on. There it is. Which one is it? I don't know. I guess we'll do this one. I don't know. I have no idea, guys. We'll click on this one. So the short interest, I guess, dropped. Let's look at the short report here, and let's look at this. So it became a triple dragon in here. Oh, look at that. You see this? So look at the short interest. As soon as the short interest was high, as soon as it became a triple dragon, the shorts went away, and then it rised, and then the shorts tried to come back, but then they kept having to leave because they just keep going free cash flow, net income, unless something stops. So again, pretty impressive. All right, good job. Shout out to you, my friend. Shout out to you. Good job. All right, so now let's go ahead and get to what we were talking about. So let me go ahead and so premiums, yeah, let me see. I got it at the end of the stream. Remind me, just in case if I forget. If not, we could show them tomorrow. If CLOV doesn't go up, that's what my kids will be doing. Oh yeah, so essentially being able to learn and find just be able to go use the terminal and be able to look for opportunities out there. Absolutely. Al's my hero. I think he can't impress us anymore. He comes out with more and more. This guy is like yeah, man. No way. Never. I have over 400,000 shares now. Thanks to Al and his platform. He's helped me make me a millionaire in less than 5 years, starting with about 75K. Hey, man, I appreciate you, man. You see that? Right? Again, I can't. All I'm doing is I'm just showing you what I learned and what's helped me. Okay. And I was not, trust me, guys. I wanted to bang my head on a wall. I did not want to make this. I hate my life, right? I did not want to make the stock terminal, right? because originally I was actually using free stuff for you guys. And I was saying, you can get this information from this website, that way. But something happened in 2020. I think because of the short squeeze, a lot of people became interested in investing. And a lot of these platforms that offer the information for free, they don't offer it anymore. In fact, not even in the paid version. There was something that used to be like this. They used to offer for free, and they don't even offer it anymore for free nor paid. And I find that very funny because you need this to calculate intrinsic value, right? Based off of the theoretical academic exercise that Warren Buffett talks about, right? And they don't even show that anymore, right? Yeah, guys, I mean, so what I did is I'm like, I made the YouTube channel, right? And we have a lot of new subscribers, so I just want to say hello to all you guys. I did not plan on doing this, right? I made the YouTube channel because I saw a lot of bullshit on YouTube, and I started talking about Clover Health because I was like, man, this is completely moronic what's happening right now. And so I came out there because everyone that was talking about Clover Health didn't know what the hell they're talking about. So I came out there because they're trying to fix the problems that I've encountered as a medical student, and doctors are kind of a little pissed off at kind of the healthcare system. And one of the members was like, hey, man, where are you getting this data from? I'm like, well, you can get it from this website, that website. But really, I use the Bloomberg terminal. He said, how can I get access? I said, hey, no, it's $2,500 a month. He said, is there a cheaper way? I'm like, oh, if you have a university, you can get it for free in some institutions, right? You have to be part of their finance department. He said, man, I haven't gone to college in 50 or like whatever years, right? I'm like, how old are you? Right. He then put something in my head. He said, are there any alternatives? And I was like, I don't know. And I checked and I did not see an alternative. So that's why I created this, guys. Right. And again, trust me, I did not want to do this. This was very painful. I gained a lot of weight. I killed myself because I had to program this. I had to code this, right? I had to literally bang my head against a wall to go ahead and do this because our politicians and our educational system doesn't want to help us to being able to teach us this information. And I get it. It's Wall Street, right? Why would they, right? But anywho, we're here now. We built it. It's time for me to lose some freaking weight and get healthy. But we built it and thank God, right? So now it's just about following up on this case study. Okay. So on May 15, I went ahead and talked about the S&P 500. And I said that, is there August somewhere here? I don't know. Here it is. There it is. So I said, despite skepticism about the immediate new high, the S&P 500 swift rebound among the fastest ever after 20% drop suggests strong momentum and is likely to return to record levels by late June to July. Okay, so remember this. So now let's open up the S&P 500. A lot of people were calling that the S&P 500 is going to go down. Okay. So I said, let me go to year to date. I said that this was a recovery on May 15. I said that in June to August, we're going to approach all new time highs. Did we not? If we go to the top here, we go top, we approached all new time highs. Okay. So then on the May 27, I kind of gave my hypothesis. I said, from mid-June to July, I'm expecting a market rally. The S&P could peak between 6,000 to 6,100 in August. Well, what did it do? Right? Remember, we were in the 5,800s, right? What did it do? Well, it peaked to 400, right? 6,427, right? I always try to leave myself some buffer, but it definitely peaked up high. But then I said, after the August peak, the S&P 500 may drop to 5,600 to 5,700. I said this on May 27, 2025. This is our research edge, not financial advice. Again, disclaimer, this is an educational platform, right? I am just giving you my thoughts on the macro, on what I think about in my head. And I'm just sharing that information. Obviously, it's a lot easier for me to do it on here rather than YouTube because I have to get in front of a mic and sit down. Here, I can go ahead and type this out as I'm in the bathroom, right? TMI, right? But you get the point. Brother doesn't have time. Okay. But so then now you see the S&P and it's the first day of August, and what happened? We dropped, right? So I think there's going to be some consolidation. Now I need to redo my research, and I'm going to update the research edge on what I think is going to happen. But I think that based off of just kind of what I said before, again, and this all could be wrong. Yes, I was right this time, but I could be wrong next time. Okay. We don't know. But all I do is I try my best. I try my best. Isn't that what you can ask for? I work hard. I try my best, and I do not have, no one has to read in between the lines of what I say, right? I say it how it is, and that's it. Life is short for some riddle bullshit. And I hate when people speak in riddles, right? I have mentors that speak in riddles, and I just, oh my God, are they annoying, right? It's so annoying when people speak in riddles. Just be direct, right? Don't speak in riddles, right? But yeah, I don't speak in riddles, okay? But anywho, the pullback, I think, is going to set us up for a Santa Claus rally, okay? So there's that. So let me just exit these here. So I know I talked about them because there's a lot. Oh, yes. Okay. Markets. Again, you see how we haven't even talked about UnitedHealthcare yet, or like alignment or anything like it's just insane. We have not talked about that. Okay. So there's a lot to look at right now, because we had the jobs report, Federal Reserve, so many different things we need to basically discuss. Okay. Yes. So before we do that, yes, CLOV doesn't go up. Yeah. So about CLOV, just very quickly, I want to, since we're on the topic about this, I wanted to just go ahead and let me just kind of share this actually. Quote, CLOV live, since I'm here doing it live. Mm-hmm. All right, so let me go here. So today I posted very quickly about alignment. They had earnings, they were profitable for the first time. I'm gonna show you that, right? And all these other things. But someone posted this right now, and I need to comment on all these things, okay? Okay. So for us retired folks, this is not good. We need results soon. So that's 70s dog. I hope you're watching. Okay. Listen, guys. Okay. Not financial advisor, no financial advice, but I can only speak about what I'm going to be doing when I get older. Okay. When I get older, I am not going to be investing a lot of my net worth in companies like Clover. I can't afford to, right? When I get older, I'm not going to be able to afford the opportunity that Clover Health gives. Why? Because I'm going to most likely be in bonds. I'm going to be in the bond market, right? Most likely. Or I'm going to be in real estate. Why? Because I can't take the risk. Okay. Because CLOV could take 5-10 years. Who knows how long it could take, right? But I don't have the time for that, because I'm going to be retired. I don't know when I'm going to die. Now I could have some for my kids. I can make some, some bets for my children. I don't have kids now, but just thinking in the head. But the point is I see what you're coming from, but you have to understand what situation that you're in, and this is why a lot of retail investors they like go on these YouTube channels, and they're there's like a lot of folks out there that trade live, and they're just like, they like follow them blindly, like Jesus Christ, and I'm just like, no, that's not how you're supposed to do things, right? Because your situation is different. Like my situation is different than yours, that 70s dog, right? You're retired. You need the money now. You can't wait 10, 15 years, 20 years. You don't have time for that. You don't know if you're going to be alive tomorrow, right? I'm not saying, I'm not saying you're going to die, man, right? But I'm just saying, like, your financial situation is different. And this is why, like, a lot of folks need, personal advisors, right? I'm going to have, I personally, I don't need an advisor, but I'm going to have one just in case. I'm going to have one as a friend. I'm going to say, hey, listen, let's talk shop. And obviously I'm going to challenge him because I know what I'm doing, right? And I'll be like, we go back and forth. But my job is, I want to make sure I don't have any blind spots in what I'm doing, right? Right. So I'm going to talk to my own financial advisor because I'm not a financial advisor. I'm going to speak to my financial advisor because my financial advisors might be able to help me on some tax stuff too, right? And I'm going to say, hey, and I'm going to try to find a financial advisor that's also CPA as well. We have one that's really smart, but I'm going to say, hey, am I missing anything here? Am I effectively doing something? Am I missing? Because dementia is real. I could get demented. Who knows? You don't know. The point is to create guardrails for yourself, right? No one is ever 100% right in the stock market. The stock market is a bitch, okay? And it will destroy you, right? And that's just what it is, right? And I found success by looking at the fundamentals like Warren Buffett, and I'm just sharing you the data that you can get access to. This is the only educational platform that's out there that gives you data. Like there's no, like you go to MBA school, they're never going to give you data. They're just going to give you the PowerPoints. Bon voyage. You got the piece of paper, a degree, right? But you will always have this data with you at the pocket of your hands or the computer. Okay. So anyway, that's the whole point, right? So I wanted to, you reminded me about, Karen, you reminded me about that 70 Docs comment. Okay, so there's that. So we talked about this. Okay, now markets. Okay, so markets now are leaning towards more Federal Reserve cuts in 2025 than Fed itself projected just days ago, following a weaker than expected July jobs report, 73,000 versus 104,000. So definitely a soft jobs number, a soft ISM. I mean, that's a really bad jobs number. Soft ISM manufacturing about 48 versus 49.5. A drop in the University of Michigan 1 year inflation expectation 4.5 versus 5. The VIX today surged 20%. Right, let me show you. VIX is the volatility index. It surged 21% today, guys. It literally went up. Look at that. You see how it went up? 36%. So what's going on? So okay, fine. This is the data. So how am I interpreting the data? Like what in my mind am I seeing? Well, I was really upset that Jerome Powell, okay, I knew he was not going to cut in the summer, but I was for sure damn upset about him not saying anything about September. We haven't made any decisions for September. Are you serious? There's a lot of data out there, and I attacked him. I attacked the Fed. I sent my message to the Fed and I attacked him, right? And I went ahead and I posted online of another thing I went ahead and attacked, right? Because I was upset. I'm like, are you serious? You're supposed to be data driven. So if you were to look at this, guys, and look at this, I said the federal funds rate sits at, this is again July 30th, right? So the federal funds rate sits at 4.25 to 4.5%, while the 2-year Treasury yield is down at 3.9, at 34 to 55 basis point gap. Since the 2-year typically forecasts where rates are headed, markets are clearly expecting cuts, yet no action from the Fed. It's starting to feel like Chair Powell may be letting politics cloud the policy. So why am I saying that? Why am I upset? Well, I'll tell you. For folks that don't know, let me go ahead and show you here. Treasury yield versus federal funds rate. So let me go ahead and just open up this tab. I keep closing tabs and opening up new tabs. Okay, so let's go ahead and clean this out. Let's remove all this garbage and let's focus on this and let's look at 5 years. Okay, so let me show you something. Okay, so this was 2022. The Federal Reserve was late to the Federal Reserve. The mark. Okay, think of it this way. Think of the red line. The red line is the 2-year Treasury. Again, this is our teaching, right? This is where we teach. Okay, again, education, right? This is teaching. Let's teach. The 2-year is the Treasury, and the federal funds rate is the the rates, the current rates that Jerome Powell talks about, right? Now let me show you something. So the 2-year Treasury, think of that as like Wall Street, bond market, Wall Street, right? You could see how if you go here, Wall Street thinks that the federal funds rate should be here, right? But it's still at 0. It took literally a year for them to get to where Wall Street was wanting them to do it. So you see how like for example, we're here and then Wall Street's here. Wall Street's here, and then the federal funds rate is here. Wall Street's here, the federal fund. So now the feds are here. Wall Street was here. They ended up cutting down to Wall Street. Now guess what? Wall Street's down here, and the Fed's up here. The Fed needs to cut. Okay, they need to cut. And if you don't, again, this is a little trick that you can learn. Okay, see this here? It's a little trick. See how you see how it's a little trick? See that? So this is kind of where we're at now. So what happened today? Well, how many Fed cuts are we expecting in the computer's kind of slowing down here. Let me see if I can. I'm going to cut these off here once I finish them off so I can unslow the computer. So how many Fed rate cuts are in 2025? So what happened? Something surged. August 1st was today. Something surged. What surged? The blue line. What's the blue line mean? Two. Holy moly. Is that what it is? Is it saying 120? Is that really what it says? Holy moly. Am I reading that right? Oh my. So the market, based off of today's jobs report, is saying 250 basis point cuts. That's a lot. And then the red line is 125 basis point cut. Wow. That's pretty cool. And then the purple line is 375 basis point cut. And then the lower line is no cuts. So you can start to see how we shifted. Okay, now let's look at the September. So when the Federal Reserve spoke Wednesday or whatever, the market surged and they said that red line was higher and they said no cuts. The market was saying, okay, fine. Federal Chairman Jerome Powell is being a stickler and they are not going to, and I'm sure people are trading this right now. You're going to see the number go up more. So if we go to let's just look at the week. Let's look at the week. So look, we went from expecting 25 basis point cut in September to the Federal Reserve chairman speaking to basically them saying, okay, fine, no rate cuts, because he was pretty hawkish. The Federal Reserve was hawkish. So then Wall Street said, the poly market said, okay, fine, no change. But guess what? Today's job report came, and now look at that division. We have a 70% chance now that we're going to be getting a rate cut in September. That is huge. That is huge. Okay, why? Because, bro, if the job market's going down, we're about to enter a freaking recession. Unemployment rate surged to over 4%. The jobs number now is below the 3-month simple moving average. This is huge, okay? Which is why Trump is pissed, because he might get a recession on his hands, So luckily, we're in a different time point because the feds now are they're forced to cut. You better cut, Mr. J. Powell. So now let's see what October says. Again, it was like 25 basis points. He spoke. Everyone was like, I don't know. And then today with the jobs report, they went from I don't know to no change. And then today's jobs report, 57% chance, 25 basis point cut. Okay. So, just look at that big change. So I'm going to remove these things. So as you can see, I'm going to remove them so it can unslow my computer. We talked about this. Now we talked about this. Let me just kind of zoom out here and then zoom in this way. Again, for folks that want to look at my research here, please follow me on, Twitter. We have 2 accounts. We have @AlStockTrades and we have @_AlBurnAllen. Okay, so now that we talked about the feds, We talked about now that they're going to have to cut, right? And what does that mean? What happens when they cut? Well, we got $7 trillion sitting in money market funds. What's going to happen to that? That's going to be hit hard in the stock market. So stocks are going to go up, right? And I think real estate's going to go up too, right? Because interest rates are going down. Okay, when interest rates go down, discount rate goes down. So what happens to intrinsic value? It should go up. I believe that the Russell 2000 is going to end up going up. We're going to finally see the Russell 2000 at all-time highs. In fact, I'm curious to see Bitcoin right now. Bitcoin prices. So Bitcoin unfazed. Okay. Now, we said that Ethereum is a prognostic indicator of small caps. So we should be seeing, oh, look at that. Literally almost new all-time highs, right? So I expect that to continue to develop. Okay. So there's that. Okay. So we talked about this. Okay. Now let's talk about all these other things. Okay. Holy moly. Freaking hey guys, what a long life. Okay. So that was 57 minutes. We haven't even hit the meat yet. So give me a 1 minute inter-session break and let me go get some water. All right, guys, I'm back. All right, so just needed to get some water and a little break because, again, guys, I'm doing this live off of the cuff, right? There's no like transcript. I'm not reading off anything. All right, so as you can see how disorganized it is. All right, so United Healthcare, okay? Oops, wrong one. If you guys have any questions, please drop them in the chat. All right, United Healthcare. Okay, so let me go ahead and let me go to the research edge real quick. So I messaged something in let me think here. Hold on. Let me see this. All right, good. So now let me go to the research edge here and there's a lot of great research on the subdomain. We have a lot of people that do coding in our platform and they're doing some subdomain research on Clover and they're finding some really cool things. I can't wait to look at it tonight. I haven't looked at it yet, but I can't wait to look at it tonight. Let me think. So you remember when United Healthcare reported earnings, guys, for lifetime access members? I mentioned something. And I did some napkin math. I was like tired. And I was like, there it is. Yeah, I'm such a freaking nerd. Okay, so here it is. So I went ahead and this was on, when was this? This was on July 29 at 3:41 a.m. I said we might see United 220 to 240, probably up range. I would need to do my calculations, just doing it on my bed right now, napkin math. And everyone started laughing, right? So this was July 29. So when was July 29? So July 29 was like right here, 268. What did I say? I said 220, 240. Where are we at now? 237. Low 234. Interesting. So I said it on July 29, right? So you go here, 11%, 12% down. Yeah. And again, how did I do this? I did like the price to earnings calculation, and I we'll be talking about it in depth because I find this very funny and interesting in regards to Humana versus United Healthcare. In fact, let me see right now because I don't think they haven't released. Did they submit? Yeah. Oh, good. So they submitted the information. The stock terminal still needs to get they sometimes they submit the information, sometimes they don't. They submit only part of their information. But this is good enough for us to see for Humana. Let's look at United Healthcare real quick. Just okay, good. They submitted. So United Healthcare submitted all their information on time because they obviously, need investors' help. So, Humana still didn't do much, but it's okay because Humana is doing something. Humana is doing really good, and I will explain kind of why. But let's look at United Healthcare real quick, and let's look at earnings per share. So earnings per share for United is $3.74. Last year it was $4.58, and then the year before that in Q2 it was $5.89. So you can see it went from 2 years ago, the same quarter, $5.89 down to $3.74. In fact, if you do the enhanced AI analysis on the quarterly, you could see here quarterly for earnings per share is down 18%, which is over it's a 1.6 standard deviations. And then earnings per share, we had a sign flip. So they're able to fix themselves. But if we were to go to earnings per share, let's go to Q2. Yeah, so it wasn't as significant as this. So look at this. Q1 earnings per share dropped a lot. In fact, sadly, a lot of retail investors didn't catch this. How they dropped from 6 earnings per share to 1.53. So usually by like the first quarter of 2024, it was a good time to look at Humana differently because they're negative earning. They're not making. They're negative. And if you were to look at early 2024, the stock price was up, and I find it funny because if you would have saw that, you would have realized the writing was on the wall. In fact, people are so stupid that they even brought it up to almost $600 here. I mean, the 52 weekly high is $630, and now like literally dropped 60%, right? So in less than four months, UNH dropped 60% from $600. That's insane. So what happened, right? So let me go ahead and okay, fine. They finally got their fraud investigation. So yes, the DOJ is investigating them. They didn't know. Now they know. So the stock dropped there. So I guess it wasn't already baked in. That's number one. Number two, the stock keeps dropping, and we have to ask ourselves why. And a lot of retail investors don't know why. And I'm going to explain why did the stock drop 16%? I mean, guys, 16% for United. It used to be over a $500 billion market cap. Now it's a $200 billion market cap. So, again, why? Let's, from an educational perspective, let's go deep. Stock go up, stock go down. No. Let's go deep, right? A life not examined is not a life worth living. Okay. So let's go deep. Okay. So let's figure this out, guys. Okay. So let me give me some, give me a moment here. So let me go here. Let me go to Twitter, X. Let's go to media. Did I post this? There we go. Okay, good. So this is United Healthcare. Okay. So here's the Q2 results. Okay. So they beat on the revenue, but look at the adjust. I don't care about any of this. All I care is about guidance, right? That's what Wall Street cares about. Okay. Now, let me show you. Okay. So Wall Street expected, and I'm sure they changed it because these people are sore losers. Let me see. UNH. Analyst estimates. Let's look at earnings per share. What a joke. Oh my God. What a joke. What a joke. Okay. All right. Enough laughing. Okay. All right. So they changed it. So as you can see, and you see how they change it so they can look they can look smart. So let me zoom in. Okay. So they changed it. So originally, is it December 2024? We were expecting 24.7 earnings per share. Okay. So what did they earn for United? Let's go here. This is why the data is important. Look at this. So United was at 24 in 2023. Wall Street was expecting, all right, fine. We'll give you a break, United. You know, we're expecting 25 earnings per share in 2023, but you gave us 24. Okay, fine. We're expecting 27.7 earnings per share in 2024. But so in 2024, they expected 27.7 earnings per share. But then they gave them 15.64. They gave it 15.64, way below estimations. Now, again, they thought that this was kind of a one-downer thing. They're going to figure things out. And so they went ahead and they expected in the beginning of the year for 2025, they expected United Healthcare to essentially be at, in fact, let me see something. They expected them to be in the upper 28 earnings per share, in the upper 20s. I'm saying these numbers now because we're going to be watching these videos regarding United Healthcare, and I'm just kind of giving you the data and the background. It's almost like you're getting a lecture. So when you look at these talking heads, you have some knowledge to work with. You know what I mean? Like I'm giving you kind of the information that gets you up to speed. Okay. So that's what I'm doing right now. So let's go to United Healthcare Investor Relations. Watch, it's gonna be offline. What website's not working? I'm just kidding. All right, let's go ahead and do this. So let's look at the quarter one release. No. Let's look at the quarter four 2024 earnings release. And let's look at guidance. Let's screenshot guidance here so we can save me some time. So I don't really see any guidance here. Because I don't have time. Did they give any 2025 guidance? Okay. So there it is. This is why they fired the guy. There it is. I found it. I just needed some help finding it. Okay, guys, are you ready for this? Oh, it was on the first page. Oh, even worse. All right, let's read this together, guys. Let's cut this out so we can make some space for ourselves and just sit back and enjoy, guys. Happy Friday. I'm sorry for the long video, but I care about you guys, right? Again, it's long because there's just a lot of information to talk about. Okay, so all right, guys. So so this is United Healthcare Q4. They give out guidance for 2025. All right, ready? Listen to what they said. The people of United Healthcare Health Group remain focused on making high quality, affordable healthcare more available to more people while making the health system easier to navigate for patients and providers, positioning us well for growth in 2025, said Andrew Whitty. All right, who is Andrew Whitty? Okay, this is the guy that sadly stepped down. I was trying to find a picture of himself. Oh yeah. Here it is, right here. Look at that guy's face. I feel so bad, dude. I feel so bad. It's that meme in the sky. Meme looking up scared. It's this meme, guys. That's literally what I see him. in United Healthcare. You know what I mean? I really see this guy like this, you know? Let me see if I can find a better picture here. There it is, like this, right? In fact, let me just, that's literally what he's doing, right? He's looking at it and let me just explain to you kind of what's going on here. So let me put these two pictures together. So we'll put this here. We'll put that there. We'll take this. He's like looking up. Okay. Go like this. Okay. I'm just going to download this right now. All right. So let me show you guys. So check this out. This is what I think of United Healthcare now. Why? Okay. Let me go ahead and exit this. Why? Well, check this out. So this is what he said. United Healthcare Group affirmed the 2025 performance outlook established in December 2024, including revenue of $450 billion to $455 billion, net earnings of $28.15 to $28.65 per share, adjusted net earnings $29 to $30 per share, and cash flow from operations $32 to $33 billion. Okay. Now going back, okay, let me show you, because later on Clover is going to start talking like this. So you guys, right? So this is the cash from operations. He was saying operating cash flow was essentially going to be around 33 billion. So that probably made Wall Street excited, right? And he said that earnings per share, I don't know why it's like this. Annoying. Earnings per share, he said was $28 to $28. He literally said earnings per share is going to be $28 to $28.15 to $28.65. So, and that's huge, because look at earnings per share for 2024. It was 15. So Wall Street thought it was going to be $28, but guess what? It wasn't, right? So Wall Street quickly went ahead and adjusted their expectations. And now they're expecting 2020. I think 2027 and 2028, all these need to be revised because we don't know, right? So now Wall Street said, all right, fine. So the first quarter came out for United Healthcare, and the first quarter earnings per share was $3.74. Right? So if we were to take $3.74 multiplied by 4, that's 14.96. That's about $15 earnings per share. Right? So $15 earnings per share. So that if you were to extrapolate it. But they were saying that in Q4 2025, it was $28 to $28.15 to $20.65. So what do? They went ahead and revised their earnings near Q1, and they essentially fired this guy, stepped down, because that was horrible. They went from $28 to revising, actually they didn't even revise earnings. They removed guidance. So they went ahead and they removed the guidance from this, right? So, I feel bad because I don't understand whether or not this is good or bad for Clover. So why do you think it's good? Why do you think it's bad? Ask yourself that question. What's going on? And we're talking about United, and how is United fundamentals related to Clover fundamentals, right? And you're looking at the stock price. I'm saying look at, because we're an educational platform, look at the fundies, look at the fundamentals, right? So again, not financial advice, but I'm saying, from an educational perspective, what do you think is good and what do you think is bad from this, right? And you tell me, right? So okay, so check this out. So first they said in Q4, how you doing, Eric? First they said Q4, they're going to have $28 in earnings. And do you know what they did? They pulled their guidance in Q1 earlier this year. And then Wall Street was waiting. Wall Street said, fine, we will allow them to go to 17.96. This broke trend line, by the way. This broke trend line for United. Okay. So the Wall Street said $17 to $18. That's it. So you're going to start seeing in the videos I'm going to show you, Wall Street kept saying $18, $18, $18, specifically $18 to $20 per share. But guess what United reported? You're not going to believe it. United went ahead and they reported earnings of $16. 16. The consensus for Wall Street was 20. This was below. This is huge. This is huge. You're telling me if you look at earnings per share for United and look at earnings per share, it was the last time it was 16, it was in 2020. Literally same revenue. And in 2020, it was around 16. Not even, it was below, So what was the stock price in 2020? I'm curious. Right? In 2020, so let's look at more. So there it is. Isn't that interesting? Right? So it's fallen. So if you would have invested in United 5 years ago, you would be down 21.47%. Right? And just look at this big drop. I mean, do you guys let me just remove the date, screw the date. You see this drop here? Look at that drop. Okay? So it tells you there might be a disruption has been on the back run, and now it looks like we are seeing the results. Exactly. Right? So highs of, again, we're going really slow right now, but we're trying to, again, Alignment reported profitable quarter. It shot up like over 40%, especially in the pre-market after hours. And then it fell down, but it was profitable for a quarter. So why did it fall down? Well, first off, it needs to be 4 consecutive quarters, like I told you guys, in terms of, from what I think, we're going to see something happen. Again, that's just my hypothesis. Again, not financial advice. I'm just giving you kind of my thoughts, right? But it's funny is it fell back down. Why? Because look at United. Look what happened to United this week. They don't care. They're like, Alignment, good for you. You're profitable. Shut up. Leave us alone, right? So without numbers, it's gambling. But with data is investment. Numbers don't lie. Exactly. So I'm going to repeat it again. Okay? I'm going to repeat this again. If I can find the damn thing. Last year, UnitedHealthcare gave 2025 guidance. They said that they are going to be having $28 approximately earnings per share. Then, and earlier this year, they pulled their guidance. They said, oops, never mind, right? And then they fired this guy, okay? All right? So then Wall Street said, all right, fine. Wall Street said, fine, we'll downgrade you to anywhere between $18 to $20 earnings per share, but you got to show us the money. Well, they went ahead and did. And you know what they said? Let me just remove all this junk here. You know what they said? Okay, where the hell did it go? This is what they said right here. They said, I'm sorry. I know the consensus was 20, almost 21. but we're going to do $16 earnings per share. That is not good. Okay. That is very bad. And retail investors now are starting to realize that they are getting screwed now. Why? Because how many, I don't know. You remember all these people on Twitter? Oh, UNH is this, and that. UNH, yada, 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 yada. Right? So let's just kind of look at this here, okay? So let's look at UNH here, okay? So let's see what people are saying. What the hell is this? How UNH under 240 is looking at me right now. Okay. Okay. Well, let's see what. Okay. All right. I wasn't expecting that. UNH is now trading 8 times operating cash flow. This is large. Okay. So he's talking about cash flow. Again, it's true. Cash flow has gone up, but look at cash flow from before. It used to be 8 billion. Now it's 7 billion. So if you were to look at cash flow and graph that, cash flow's actually been going down. You see that? So I don't know. And this guy's probably been big buyer of United. See? Me watching my past self sell Nvidia at 137 and buy United at 300 to lock in my capital gains in a defensive stock. You see, people are starting to realize that this may not be so defensive after all. UNH is reminding me, there it is, of Boeing disaster. Remember, Boeing BA hasn't recovered in 5 years. Sure, UNH can bounce a bit, but you might wait for your 100% 5 years. Don't go too crazy on this stock. Look at that. Look at that. This Leah girl. This Leah girl is I think I'm in love. Sorry, Michelle. It's over. I'm just kidding. So let me say here. Wow. I couldn't agree with you more, period. It's good to see people on here that can actually think for themselves. Strong work on this observation, exclamation point. It's interesting because Q4 2024, United Healthcare said that they're going to get anywhere between $28 earnings per share. Then they removed guidance. And then Wall Street was expecting around $20 consensus earnings per share. And you know what they gave them? $16 earnings per share. There's a huge disruption happening right now in the market. So let me just go ahead and have this dictate. Okay, so we're going to go ahead and do this. UNH and CLOV. Okay. All right. So I like this lady. I am going to follow you. Excellent. Very good. Very good. She reminds me of our baddie, right? Excellent. Excellent. Very good. Very good. All right. Very good. Excellent. 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 Good job. Good job. Excellent. Okay. So then now let's go to United Healthcare. And so that's good. This guy, I don't agree with this guy. This is I don't have a comment on this. It's a paradox to me. One thing does not equate to another. For all my nerds, you'll understand what I'm saying. Okay. There it is. So people are talking. So people are still talking here. And all right. So as you can see, earnings per share is getting hurt right now for United. So now let's look at Alignment and Humana. I see. So they may see the health sector as being risky because of the possible disruption, at least. Yeah, so that's a good observation. I would say, you know what? I agree with your observation. I agree with your statement. Because if I was to look at the whole market, the S&P 500, and I would look at it, let's say from this year to date. Year to date, healthcare is down 16%. Healthcare is outperforming. If you look at United year to date, it's down actually 52%. So it's a lot better, a lot worse. Sorry. Molina year to date is down 45%. These are all healthcare stocks, right? What else? If you look at Centene, it's down 57%, right? But if you look at Clover year to date, it's down 11%. You see how it's like better than being down 50%? You see how there's a difference? And likewise, look at a year. Clover's still up 66%. I'm curious to see Alignment Healthcare. Again, it's not fair because, yeah, even still after reporting earnings, Clover's still higher than Alignment Healthcare on a yearly. But it'll be interesting to see what Clover's going to be like with this 12% here. We'll see what ends up happening. But okay, fine. That's year to date. How about the last 10 years? Has healthcare been a good investment for the last 10 years? So if you look at it in the past 10 years, healthcare has not been a good investment. Not because in the last 10 years it's been bad. No, because this year and last year, stocks have fallen. If you look at healthcare like United from like 10 years ago, yeah, it was a great investment. You made a good money. But guess what? Because of this, the past 2 years, especially this year, it soured the whole market where the returns annualized. If you would have invested, 10 years ago, you would be down 9.13%. So now we have to ask ourselves, why is it like this? Well, costs, structure, V28, so many things, right? So out of all of this disruption, we have to look at contrarian investors. Contrarian are the people that go left when everyone's going right. They always think independently. And a lot of people like that make a lot of money. So, there's a lot of people on Wall Street now are looking at this and they're just saying, everyone's so focused on these right now. I want to look at more down here. Is there any opportunity here? And United is so effed right now, so they're pulling out of that. But why are institutions buying more Clover? Right? You have to ask yourselves that, right? So you're seeing a lot of institutional ownership increase. So from that, you have a whole disruption happening. And the only ones that are becoming profitable is, as of right now, is Alignment and Clover, right? So I don't really see that happening. I don't really see that happening. I could be wrong, but that's something that I'm not even thinking about. Like how like there's like things you think about, and then there's like aliens that come into space. That's pretty. I put that there. That's not even in my radar, right? But hey, it's a thought. But I'm not holding my breath on it. Okay, maybe, who knows? You never know. But I don't know. Okay, so all right. So we talked about the returns for that in terms of healthcare. We talked about United Healthcare. So now let's talk. So United Healthcare did terrible. Okay. Now let's look at Humana. So Humana actually did well. If you look at quarterly, the revenue from last quarter, 29 billion to 32 billion. Net income went from 679 million to 545 million, the net income actually went down. So if we were to calculate the net income, oh no, sorry. Whoops. If we were to calculate the net income, it didn't go down as much as what we thought. So that's good. So net income here, we went from 741 to 1.2 bill. So that's good. But then Q2 679 to 550, 545. So for United, let's look at United now. 4.2 billion to 3.4 billion. They literally dropped almost $1 billion. Wow. Okay. Let's look at earnings per share. Earnings per share, $5.64 down to $4.52. So the question now is, what is the guidance for earnings per share for Humana versus United? That's going to be a good one. Okay, so to do that, we're going to have to calculate, and let's just do Humana. Actually, let's do United first, since we already kind of know the numbers. We spent a lot of time on it, and then we'll do Humana. So this is actually going to be really important. So here's earnings per share, and then here's shares. So the shares, there's obviously more shares for United. So here's that. So you have 910 million shares. In fact, let's look at 907 million. Let's open up our Google Doc. Let's type in UNH. Outstanding shares is equal to 907 million. Their EPS estimate for this year is $16. So if you were to want to look at income, you take 907.14 million to 6 times $16. Whoopsies. We do that. So that's about 14. So that's about 14. Let's round. It's about $14.51 billion of approximate net income they're going to make. So what was the net income? Let's go to the year for United. The net income was 14.4 billion, 14.5. So they're pretty much going to stay the same in terms of net income. Okay. Right. Which makes sense because, it's around the same earnings per share. So their net income, this is their net income for 2027. Sorry, 2025. So now this is kind of United. So now let's go ahead and look at Humana. So Humana, let's see what Humana says. Humana Humana Investor Relations. We go here. Let's go here, and let's go here. Okay, let me just go here. Let me see here. So let me find the guidance now. Okay. One moment. Let's see if they give a guidance. So this is their guidance here. Let's see if we can find it. There, it's again first page. All right, here it is. So let's read this. This is for Humana. Affirms commentary in line. Gap earnings per share is 15.8 or approximately 16. So it's the same earnings per share, but yet there's more shares for United, right? But each share is giving out 15. So if I buy 10 shares of United versus 10 shares of Humana, I'm getting the same thing for earnings per share. So that's what the market's seeing right now. Okay. Now, granted, there's more shares in United because there's more net income. But if you look at United, $400 billion net income, revenue, Humana, $117 billion. So now let's calculate this. So let's just do 15.88. So let's do Humana. Outstanding shares we'll see right now. EPS is this much. Outstanding shares, we go back here. It's all data. It's all data. That's all it is. It's all data. That's 120 million shares. This is a million. So now we're going to take $120.27 million multiplied by 15.88. So that's about 1.191 billion. So the net income for Humana is 1.9 billion. All right. So now let's just add a couple more things for our, just for me to kind of figure out this business. This is like stuff they do. This is like bread and butter, So on average, here's the revenue. I mean, we technically should be using the revenue that they guided for, but we should do that, honestly. It's fine. This is good. This is good enough. This is good. And then so net income for Humana is going to increase from 1.2 billion to 2025 net income. Now, for some reason, I think that my font is too big here. I want everything to fit on one page. Is that better? Yeah, that's good. So the net income. Oh, I put it here. Yeah. So net income is 1.91 billion, right? Now, the 2024 net income was actually 1.27 billion. Sorry, 1.207. We'll just say 1.2 billion. So you could see Humana's net income is going up, right? So it's right. So now let's look at United Healthcare's net income for 2024. You type in United, it's 14.4. So pretty much it's going up by a little bit, but nothing much. Right? You see the difference? Whoops. So I'm just going to put this here. Now, unfortunately, not a lot of people do this type of research, which is unfortunate. But again, this is a deep dive. This is what due diligence looks like. This is what I do when I'm by myself, right? So I'm just showing you, right? And I know it's a tedious, annoying, but this is what it is. Then we're gonna start figuring out kind of what company is good. So United Healthcare. I'm gonna look at what company is more effective from this is a good. I mean, this is like real data, right? So All right, so this is, you could just use this as a 400.3 billion, and this is 117.8 billion. Okay. All right, so now we're going to figure out kind of what's going on here. Okay, so how much of the percentage of net income become from the revenue, how much net income can they pull? So we're just going to remove, I'm going to kind of push this down, or better yet, I'm just going to go like this. I'm just going to go. So to calculate that, all you got to do is you got to take the 1.91 divided by 117.8. So as of right now, about 1.62% of revenue turns into net income. Now, both these companies are being distressed by medical costs, but at least Humana is showing somewhat of an improvement. So now let's see. Again, I've never done these calculations, so this is going to be learning for me. I don't know, these numbers just happened this week. I was busy this week, so I'm doing this in live. That's why it's taking me time. I haven't done this, right? All right, so we got 14.5 divided by 400. Interesting. Oh, wow. Let's see here. Yeah. So 3.62% of net income. Oh, sorry, of revenue turns into net income. So from this perspective, even with United reporting this, United Healthcare. So now let's look at the difference. So we take now 3.62, subtracted from 1.62%. So now UNH, United, has a 2% better, rev to net income calculation. So what this means is UNH has a 2% buffer. Interesting. UNH has a 2% buffer. That is interesting. That is very, very interesting. Wow. Okay. So even right now, Humana has better cost containment. United still has a 2% better buffer than Humana. So what this means that in the long run, Humana doesn't look like it's gonna be outperforming United until we talk about the subdomain from Counterpart. Okay. So I'm curious now. Again, we don't have a lot of data, but let's just do the math. Clover. Again, so we only have one data point, which is this. Q2 2024, we got 7.41 million. Now, I think this number is not as good. It's still 3.5 stars. I think this next on Tuesday, we're going to get another Q2 for 2025. It'll be right here. And that should give us, I think, a higher number. We may get over anywhere. I think anywhere between 10 to 40 million. Who knows? I would say 10 to 35, 10 million to like 35 million. Who knows, right? but I need to know kind of the net income, what it is going to be. Now, obviously, EBITDA, which we're going to sadly have to do another video on, because EBITDA is like, there's so amazing things happening right now with EBITDA, like we got to talk about, right? But based off of this, if you take 7.41 just for the quarter and divided by, 356.26, interesting. You get this. Oops. Hey, let me just do it on this one here. So if you get, wow. So if you get 356.26, and if you divide with 7.41, right? And you multiply that by 100%, you get to, you get. So then now let's make these smaller so we can fit Clover in here. Okay. Let's zoom in so we can see a little better. So now we're just going to push this like this. Now we're going to look at CLOV. So CLOV is this. CLOV is this number. Sorry, every time I paste it, it's making me. So we can upgrade this to 8, round up. So that's interesting. Holy freaking crap. Holy God. Holy moly. Okay, check this out. So the revenue that turns into net income, the calculation for United is 3.62. Okay. For Humana is 1.62. For Clover is 2.08. Okay. Now remember, this is Clover at 3.5 stars in 2024. Okay. 2025, we're still going to be paid at 3.5 stars, even though we're advertised as 4. Next year will be 4 stars, which gives another increase, right? But hold on, check this out. And also CMS is going to increase this by another 5%, right? But check this out. So even with a 3.5%, and even with a year that was just trying to get rid of ACO payment, we still had 2.08%, still a better buffer than Humana. And obviously United still better than us. But guess what? I think net income is going to be a lot higher next quarter. Analysts' expectations are thinking 3 pennies. So to calculate that, we'll just go here, put in CLOV, and all we got to do is take, 0.3 times 508.92 million. I'm getting this number here. And that should give you around 15 million. So Wall Street is thinking Q2 2025, Wall Street is thinking this number. Okay. So that goes to 8. So if we were to do the calculation now, and we say, 15.28 divided by, I don't know what the expected revenue is going to be. It's going to be tough because they're going to be growing around. I don't know. Let me do some math here. Times 4. Yeah. So let's just use the same revenue as Q1. That's as best as I can do right now. Holy freaking A. It's happening, guys. Holy A. All right. So now, sorry. So now, are you guys seeing what I'm doing? So now it's this. This is for, so 3.3% now if they make 15.28 million. That'll be the percent. So you see this? You see how more revenue now goes into net income, and that's 3.3%. Humana is at 1.60%. Now again, this is if Clover goes to 15.28 million. If they, let's say, make 7.41 million, which is what they made last year, they'll still be at 2.08%, and they'll still be higher than Humana. Imagine if net income didn't go up. Obviously, I think it is. I think net income is going to go up. There's no way in hell, right? Obviously, there's always a possibility, right? But even if it didn't go up, we would still be better than Humana, right? But if it does go up to 15, it'll be 3.3%. Now, again, if they do like a Houdini and they give us like something crazy, like let's say they give us like 35 million and it's at like 462.33 and it's like a 7% of revenue goes to net income. Holy shit. So the question is, how are they able to do this? How? Someone said it, Karen here, right? Clover Assistant more efficient as they scale revenue. Exactly. Okay. So what this basically is telling you is that the margins for Clover is a lot better than the rest of the market. And this is exactly what Vivek was trying to tell us, right? Let me remind you, for folks that don't know, let's go ahead and just revisit this, and then we'll move on to alignment. Again, that's why I said this is going to be a long live, guys, right? But the thing is, you see how we're breaking things down? We're going to the little nooks and crannies right now to find these goodies. Oh, that's not Hefnader. So I know it says Karen. I don't know. All right, let's see here. So let's go to Vivek. Let's go here. Okay, so let's find it here. Okay, there it is. Simple things investors many times don't do, especially for businesses where the end user or buyer of the product is an individual. Look at the products, right? They sell. Compare it to the competition in terms of price and value, right? Like, for example, look at our platform and compare it to, like, let's say other platforms, right? If you determine the business you like offers its products at a more attractive price and higher value than the competition, then you go to step 2. See their internal margins compared to competitors. If they are the same or better, then go to step 3 and ask yourself why. If why is like a moat, then that the business has created and it is widening, then you may be looking at a pretty awesome investment over the long term. If you choose to pass, you probably are a bad investor in general. Not doing this is how most investors missed Walmart and Costco many years ago, right? I think it's pretty clear, right? All right. So now let's go to alignment. So I don't know. Did alignment fill out? They're a smaller company. So, oh, look at you, alignment. You filed it pretty quickly. Look at you. Good job. Ooh, Alignment Healthcare. Okay, so now let's calculate Alignment Healthcare. So in terms of the percentage. So if we calculate Alignment Healthcare, I'll just do it here. So we do 15.67 divided by this number. Let's see what the percentage is. Multiplied by 100%. Alignment Healthcare is 1.54%. So now let's remember. I want you to remember that number. Alignment Healthcare, 1.54%. So now let's go to the Google Doc. It's lower than United's, and it's lower than Humana's, and it's lower than Clover's. You see that? And that was Clover last year. This year, I think Clover is going to be around 3%. Clover is going to be almost close to United's. And this is at 3.5 stars. Imagine when they get to 4 stars, what's going to happen? What's going to happen when they get to 4 stars, right? You can only imagine. Add 10% of an increase potentially to that. But again, I'm not doing that because that's speculation. I need more data. But you could see that Alignment's 1.54%. It's below Humana and United's and Clover's. Why? Well, remember, what did I tell you? Let's look at Clover real quick. So remember I told you Clover was around 2%? What was the number I used? 2.08%. Because watch this. Look. So you can learn. Look at this. Only 300. So out of $356.26 million in revenue, 7.41 turned into net income. Okay. Now look at alignment. Okay. Alignment, they need to make $1 billion, 1,000 millions, right? They need to make $1 billion to make 15.67 million. You see how alignment needs to make more revenue for that to turn into the same amount of net income as Clover? Because the amount of revenue that goes into net income is a lot less. Are you starting to see the internals of this and see how this works and how you can essentially use the numbers to ask a scientific question? Right? The sad part is retail investors don't have access to this information, right? Which is why I'm telling you, we're an educational platform bounded by a software platform. Okay. This is why I don't like, this is why people are like, oh, what's the next stock recommend? No, we don't do that. We like to teach you so you're smarter than any other analyst out there. This is a pure educational platform, right? And sadly, I've heard there's people out there that are acting like me. Say, there's people that I've noticed people are making fake profiles about me talking about stock recommendation. I do not do that. Okay. So be careful. There's a lot of scammers out there. I will never tell you to buy or sell because I'm not an investment advisor. Right. So there's a lot of people out there that are going to scam you, especially in the next 24 months. Right. There's going to be a lot of people out there that are going to be like, oh, I'm Albert. I will help you. I will never, ever ask you for anything. I will never give you personal stock recommendation advice. So be careful with those people out there. Be careful. Okay. There's going to be, I don't know who the hell they're from, where they are. There's going to be people out there. They're going to try to impersonate me. They're already doing it now. Okay. So be careful. Okay. But as you can see now from the data, and these are small numbers, guys. We're looking at quarterly numbers. We're looking at quarter to extrapolate, guys. Guys, we're looking at quarter. We're the only people doing this right now. It is August 1st, 2025 at 11:39 p.m. in Arizona time. We are the only people sitting down like freaking nerds, like virgin nerds sitting down that haven't seen anything. We're literally sitting down here doing this calculation, right? We're literally sitting down here like nerds. Nerding out. And that's how you win. You understand me? That is how you win. Okay? By doing the hard work, by looking at these numbers, freaking Michael Burry had one eyeball and he was able to spot the impending crash of the great financial crisis. Right? But the beautiful part is, you see how I ask a question and I'm able to use math to answer my question. I'm like, oh, I'm curious. How really profitable is United in relation to Humana? And I thought Humana was going to be better. That was my bias. But guess what? In this world, we have math, and math doesn't give a shit about you. And I'm like, oh, wow. Even with United dropping, United still has better margins for net income for whatchamacallit, oh boy, what do you call it? Humana, right? So isn't that interesting? So now listen. So if I was Humana and I see Clover doing its thing and it's doing well and it has a software, I'm speculating that Humana's seeing that, and Humana believes that if they use Counterpart, then they will be able to behead the big dog, United Healthcare. And I think that's what's going to happen right now. People from Optum are leaving United to enter Clover. We're starting to see an influx from folks from Optum go into Clover for Counterpart Health. There's a lot that is happening. Okay, a lot. There's so much in the background. This is a 2-hour video. I'm going to go ahead. This will be a part 1. I'm going to label it as part 1. Tomorrow we'll make part 2 because we're going to have to go ahead and talk about all the stuff, Dang it, I just removed that tab. About the White House, about Optum, about Jim Cramer talking about United Healthcare, all these algo flow is green. We're going to talk Peter. There's so much to talk about, guys. So if you're out there and if you want a platform that will take you from zero to hero, that will teach you exactly what revenue means, what net income means, to where you could literally take our platform with the data, go through all the courses, and then go to an MBA, and you'll be able to teach the professor. You'll be able to score A's on those tests, right? And guess what? We have people that are in MBA in Duke right now, and I'm curious to see, based off of what you've seen, what do you think, right? So if you're out there, right, understand that no hype, right? No bullshit, straight data analysis, straight numbers, no emotions whatsoever. Okay. Pure data. But yeah, exactly. Yeah. So options, but let's do that tomorrow since you've been gifting us. No, I appreciate you. Yeah. And also, it's I want to go lift some weights too, man. It's 11:43. I saved the last bit of gym to at the end of the day when there's no more, sunlight. But yeah, so and it's a shame this stuff takes time. But again, I'm doing this in real time, guys, right? It's better than putting it on a PowerPoint slide because that's weak, right? That's weak. And so if you guys are out there and you want an educational platform that is able to go ahead and be able to show you what financial literacy is all about in terms of revenue, net income, free cash flow, give you access to all this data to where you'll be able to see what analysts are thinking. And also if institutions are buying and selling. Don't you want to know what the big dogs are doing? Don't you want to know what institutional hedge funds are doing? Don't you want to know if they're buying or selling, right? This is the power of the platform. This is what the platform does. Okay. And it's so amazing. Okay. And I think it's a great place to learn. And you'll essentially, this small little $2,800 investment, which is going to go up in value after using coupon code SAS, I believe is going to be equivalent, if not better than taking a business course in the university, because a business course will not give you data and a business course will not be able to teach you all this information. Right. So I'm very excited. Clove to retirement. Love you all. Catch you guys tomorrow. As you can see, I'm in service to all of you guys. And my point of how I find meaning is going to I'm not at a beach now, but going to the beach. And let me show. I love this picture, guys. I really like this picture. Let me see. Where is it? Oh man. Going to the beach and just hearing the waves, sitting here, enjoying myself and just doing what I love, which is to teach. I love to teach. And I don't like to teach bullshit. I don't like to teach things that are not going to help change someone's life. This information will structure your mind. It'll allow you to what it'll do is it'll help you not get hurt by scammers, because a lot of people out there, they were thinking Open Door was, we'll see what happens for Q2 2025 with but look what happened, guys. You just get pumps and dumps, and you might get another pump, who knows, but we know that this is not going to be good, because if you look at it, look at it, like they're not doing anything. And better yet, look at the annual and look at AMC, right? Look at AMC, guys. AMC's trash. Yes, they're trying to make it happen, but look at what happened. Look at it, just literally flatlined. No life to it anymore. Just complete flatline. Okay. And then better yet, you remember Mullen? It was like we spoke about Mullen. Oh, where did Mullen go? Is Mullen not? Google is not even showing Mullen anymore. Oh, it's gonna do another reverse stock split. Shit. They even changed their name. I'm just curious to see. Do we have a picture of Mullen? It's at 6 cents. Oh my. Oh my. Let me look at Webull. Hold on. Let me see something. We'll talk about the technicals again for Clove. It'll be interesting. You see how it's going to be right on the earnings. It'll be interesting to see. And we're going to talk about alignment with its reporting tomorrow with its earnings. A lot to talk about. I'm just curious, Mullen. It's not even showing anymore. It looks like it's not showing. But people believed in this company. And the reason why is they don't know the data. Look, let's look at Mullen. You type in Mullen. Again, we're an educational platform. So Google may not show you this information, but we still show you this information. Why? Because it's an educational platform. We want you to look at these companies that have failed so you can learn. How does a failed company look like? What does a failed company do? Right? Because again, this is why it's so important, right? We use real market data to learn from, and we use real market data to educate ourselves from. And you can see look at revenue's gone down. Look at earnings per share. It doesn't even make sense. We're upset for United Healthcare from going to $28 to $16 earnings per share. Guys, look at the earnings per share from here. Negative 85,000 earnings per share. Negative 2 million earnings per share. It's all the reverse stock splits. And you know what's funny? There are people out there that I made a video about how like Mullen is trash, the stock, right? And people out there are like, oh, okay, got it, short. I will buy more. I'm like, imagine how I look at them, knowing all my information, all my knowledge, all my data. I tried to show like, hey man, this is like crap. This is not good stock. And someone out there in the internet space says, you know what? I understand what you're doing. This is a signal for me to buy more. I'm like, okay, all right. Are you slow? Is something wrong with you? Oh God, right? Maybe there must be maybe your mother dropped you on your head, right? Or something. God, who knows what happened to you, right? But the point is there's a lot of people out there that don't know how to take these numbers and interpret it, which is why even with the enhanced AI analysis, we even have this. Honestly, I'm curious. I am really curious. So I'm going to activate our AI. This is the generative AI now. Okay. I'm going to type in Mullen and I'm going to do enhanced AI analysis. And then I'm going to go in. Yeah. I'm going to go ahead and I'm going to do generate insights, and it's going to generate strategic financial intelligence. And I'm curious to see what it says regarding these crazy, absurd numbers for Molina, or not Molina, so Mullen, not Molina, sorry, Mullen. Well, I'm curious. I really want to see this, guys, before we head out. Let's see. All right, let's see what it says. So, oh my God, there's positives. What are the positive? Annual revenue rebounded to $1 million, up 199%. That's good. Let's see. Negatives. Historic collapse. Historic collapse. Oh my God. All right, let's let it finish so we can read. It's typing too fast. This is part of our AI add-on in regards to our stock terminal. Again, powerful. There it is, right? And again, these are. It's important to understand that this is just an educational platform. This does not mean to buy and sell a security, right? This is just using AI to take in this data to see kind of what it thinks, right? All right. So again, it's just something to look at, right? It's an extra piece of data that takes in all this information. So historic collapse, revenue dropped to $0 in 2022, indicating severe operational disruption. Despite growth, revenue remains extremely low compared to pre-2022 levels. Massive dilution. Shares outstanding surged 18,950% increase, hurting per share metrics. I mean, that's the really professional way to say it. I mean, I would call it crap, but all right. Shareholder equity is eroding and dilution may continue if the company raises more capital. I mean, he really destroyed this company. He really, this guy, these shareholders, oh my God, I don't even know what happened to them. So let's see here. Unsustainable losses. Operating losses exceed revenue, indicating a broken business model. You see? Indicating a broken business model. Liquidity crisis. Negative free cash flow and working capital could force further dilution. Long-term prospects. Mullen remains high risk. If revenue growth continues and losses shrink, it could rebound. But final verdict, avoid until profitability improves. Yep, it's gone now. Recommendation, avoid new investments. All right. It's like literally, here it is. Consult a financial advisor. Seek professional advice because you're stupid for looking at this company to align any potential actions with broader investment goals and risk tolerance. Consult a financial advisor because you do not know shit about what you're doing if you invest in this freaking company, right? So it's really sad, right? Appreciate you, Clover's Valuement. Zypha, thanks for everything. Happy to be a member of the platform. Man, I love to have you, man. And you're going to learn a lot. You're going to learn a lot. You're going to learn all these terms. I'm going to say, what's net income? If you don't know, you click here, right? I'm going to ask you, what is this? What is that? What is a Z-score? What is it? It does it all for you. It's all automatic. You know what I mean? And it's going to be very beautiful. It's going to be very beautiful. And we're going to learn a lot. And this is the real deal. You know, I'm very excited. This is a real educational platform. Listen, guys, education will lift you out of poverty, right? That's one thing that's been proven time after time again. Education lifts people out of poverty. Okay. It's lifted me out of poverty, right? So if you're out there and you're on the edge, take a leap of faith. Our platform is amazing. I'm very happy with what I've built and I'm happy with the community. And God bless you all. And I'll see you guys tomorrow. Yeah. Peace out. Later.